there everyone, good morning and welcome to Market Fatafat right here on ET Now. It's day of green on the screen with PSU banks having a joyride. All sectoral indices are in the green as we speak. We're at 10,091 with the markets holding on to their opening gains. The small cap index as well is up over 1%, gaining the most since the 16th of October. So we're clearly outperforming the rest of the globe right now and looking steady on the screen. Well, lots lined up today. Let's bring on board our team of research analysts. Not just that, we've got Kunal Bothra and Sameet Chavan with us on the technicals. Well, let's get started then, and Vivek, start off with big bang earnings. Divi's Laboratories, it's been a stellar set of numbers.
Well, absolutely right, Avan. The top gainer as far as the F&O index is concerned as well. So on Saturday, the company came out with its earnings, and the earnings beat estimates across all of the parameters. In fact, if you're talking about the sales, it's gone up almost 44% on a year-on-year basis. What has led to such a stellar performance, and especially in the sales front? Number one, the company which had a lot of compliance issues last time around, that has been resolved. The other thing is that API prices that the company actually provides has been on an upswing. So again, thereby aiding margins. So if you're talking about the margins too have grown up almost 85%. The core EBITDA has gone up. And if you're talking about the profits have jumped up almost 92%. No wonder the street is cheering Divi's shares today.
Oh yes, indeed, and that is a much well-deserved reaction that we're seeing on the stock. 14% and counting. Moving right on, let's check in on Reliance Industries. This one is in focus and finally in the limelight on the upside. Support to the index, but question is, Kunal, how long does the rally last?
So I think, the point for Reliance Industries is not just the bounce back which you've seen, but it's the leadership quality which is more prominent. And in a market like this, which is extremely volatile, large cap stocks, they keep on performing and, they're giving up the gains. Reliance has been holding steady. So I think that's one of the more prominent points for Reliance. Bounced off from its 200 DMA, and I believe that over the next 1 week out, the stock should try and dash towards that 1100 mark as well. So that could be a good short-term bet on the large cap side for stocks.
All right, watch out. That's the take coming in on Reliance Industries. There is potential for more upside. Meantime, let's also talk about the big banks that are in focus, and Karanya, take us through the big bulk deal.
The reason why Avan Axis Bank is in focus and is also surging away in trade is because it's going to sell its 5% stake, rather 19.8 lakh shares in NSDL to HDFC Bank. Now, HDFC Bank, however, is a bit under pressure today and is acquiring the stake for a sum of 163.3 crore rupees. HDFC Bank, on back of this development, is down 2.5%.
Okay, keep an eye out on both of the candidates in focus. Meantime, let's also talk about Dr. Reddy's, and that one sure is in the limelight on the upside as well. A nice 4% up move that you're seeing in the stock price. Well, it is on the brokerage radar post the kind of numbers that it delivered. In fact, Macquarie maintains a neutral with a target at 2,500. They said that the US launches will pick up in the second half of the year, and major launches are likely to build up sentiment as well going forward. You can see a smart rally that we're seeing on the stock in trade today, and there you have it. That is Dr. Reddy. Well, let's move on then and chat about Raymond at number 5. And why is this stock on the radar today, Siddharth?
Well, second big day of big up move for the stock, Avan. And if you look at the stock price move, they have been very sharp. Volumes in cash as well as futures market are pretty high. We are seeing formation of long positions. And since last few months, the stock was correcting. It corrected from 1150 odd levels to almost 600. That was almost 50% correction. And there was a downward sloping trend line which was formed. Because of this too sharp big up move, that trend line has been breached on the upside, and that clearly signifies that there is complete change in trend when it comes to Raymond.
All right, watch out. That's Raymond for you. Clearly looking smart, knocking on the doors of 750. Moving right on then, let's pick up another mid-cap name, and PFC is another stock that started off fairly strong and is holding on to those gains. So, Sameet, what is the technical take here?
See, it seems that the stock has, come out of its concession zone recently. It has been consolidating in a range. 85 has been acting as a very strong resistance, and today we are seeing a good breakout from this important level. So we expect, further upside in this counter. The next level to watch out for would be 90, and the major upside will get unfolded once the stock surpasses 90. In that case, 95, 98, these are the next levels to watch out for.
All right, watch out. That's the view coming in. Further upside is potentially on the cards. Meantime, there sure is news yet again on Jet Airways. What's going on now with the company, Vivek?
Well, that's right. The rumor mills are flying thick and fast. So today's Business Standard has actually reported that the company's top brass is actually looking at a stake sale, and it also reports that the Tatas may be interested in actually buying some portion of the company. But what Tatas have is the caveat is that they believe that Naresh Goyal would have to actually go ahead and give up control as far as this airline is concerned. But the other thing and more immediate concern as far as the company and its investors are concerned is that the company has actually defaulted on base rental payments towards Airports Authority of India, and the AAI has actually taken up this particular issue with the authority. So again, this is something that is quite negative as far as Jet Airways is concerned.
All right, keep an eye out on Jet Airways, and that stock is duly under pressure. Quite a bit of turbulence there with respect to the defaults on the lease rentals. Moving right on then, it's media in focus and Eros International on the radar, Karanya.
Yes, it is very much on the radar of all investors who are cheering its Q2 report card. Avan, while the operational performance has been a bit muted, EBITDA is flat at 83 crore rupees. Margins saw slight compression from 30.8% to 28.2%, but the top and bottom line numbers are looking fairly strong. Profits have grown 40% at 77 crore rupees. Revenue is up nearly 10% at 290 odd crore rupees. So on back of that, we're seeing a positive response come by in the stock price as well.
Oh yes, indeed. Keep the stock on the radar. It's a 6% up move, and clearly Eros now as well has been boding well for the company. Jindal Stainless then is another stock to watch out for, and that, in fact, that stock is under acute pressure. It's hit a 21-month low in trade, and largely on account of the abysmal set of numbers. The company put out a loss this time around of 36 crores. This is versus a profit of 27 crores, and this was largely hit by a one-time loss of 53 crore rupees due to the mark-to-market forex losses. In fact, the stock has already seen a 51% fall this year, and the numbers aren't really helping the cause. No wonder then that the stock is down and out. The revenue from operations, though, have grown to about 3,081 crore rupees. Moving right on to another bank, and why are we flagging off Canara Bank? In fact, the entire PSU banking stocks pack is looking very attractive today, Siddharth.
You said it, Avan, but why Can Bank then? Because Can Bank has been showing signs of consolidation. But of course, in a very broader range, it has been going towards this 260, 270 odd marks. At lower levels, around this 210, it has been finding a lot of support. And the pace of decline overall in PSU banks have reduced. And what we are seeing typically in Can Bank today, around 12 to 13% rise in open interest. And mind you, not all PSU banks are going up because of formation of long position. Yes, many of them are, but Can Bank is seeing maximum pile-up of positions, long positions for sure.
All right, keep an eye out. That is the entire basket, but it is Canara Bank that catches the eye. The pace of the decline has reduced positionally 5.5%. Well, let's move right on then from banks to sugar then, and it's Balrampur Chini that's on the radar. What exactly is the level that you're mapping out, Kunal? Where are you keeping your targets and stop losses here?
So, almost 50% gain for Balrampur Chini this month, and that too in a very slow and subtle kind of a fashion. Now look at the last 4 weeks of price patterns. You hardly see any big day of strong price up move for Balrampur Chini, but still the stock on a monthly basis is up almost 49-50%. Now on short term as well as on medium term charts, it's broken a slew of averages, 200 DMAs, 50 DMAs. Volume patterns are extremely strong for the stock, and with such kind of monthly returns, I believe the stock could just about continue to ride on the higher side. So I would recommend a buy on Balrampur Chini even at current levels. 120 plus is an immediate target, and stop loss could be kept at 96, 97.
All right, there you have it. That's the take coming in on Balrampur Chini. Well, ICICI Bank sure is flaring up in trade today. In fact, it's an 8% up move. Vivek, it was a good set of numbers. What exactly is the brokerage takeaway?
Well, absolutely right. So what brokerages are actually cheering is that not only the numbers were in line to a slight beat, margins were quite good, but brokerages are actually cheering the fact that the quality of the earnings is something that's actually been extremely heartening. They also believe that the company is now, given the fact that it's at extremely attractive valuations, they believe it's the best bet as far as the retail franchise is concerned. They also believe that the stressed asset recognition cycle is now nearing to an end, and they believe that ICICI Bank is now very well poised to capture market share as well as to go ahead and deliver, outperform as far as earnings is concerned.
All right, watch out for that stock. It certainly is giving a big thumbs up to the earnings. Nomura is very impressed. Moving right on then at number 13, it's DB Realty. Walk us through the numbers. Last time it was a loss, and how has it come in this quarter?
The loss, Avan, has actually widened not only on a sequential basis but also on a year-on-year basis, and that's why the stock is also being punished by the market. It has spared some of those losses, yes, but yeah, talking about the numbers, losses have come in at nearly 17 crore rupees versus 12 crore on a year-on-year basis, and sequentially also it was nearly 4.1 crores. So even on that front, it has widened. Revenue from operations has declined to a meager 20.7 lakh rupees in the quarter gone by from a 2.44 crore rupees in the same quarter last year. So clearly, the weakness has not only continued but has also worsened for the company.
All right, that's the take coming in on DB Realty. Let's shift gears then and talk about Shriram Transport as well. And this one too is on the brokerage radar today. In fact, CLSA has come out with their report. They maintain a sell rating, and in fact they slashed the target price from 1260 to 960 rupees. They believe that the lower earnings will factor in the higher credit costs. The asset quality growth has been led by rural markets, and they're very cautious, CLSA, on the stock given the pressure on the AUM growth. No wonder then that it's down almost 3%. Well, let's focus in on ICICI Bank, and that's another one that is clearly finding its feet in the markets right now despite the up move. What's going on, Siddharth?
It's not able to find its feet, I would say, but very nice balancing act which is happening in Bank Nifty. If you have ICICI Bank going up by 8%, Axis Bank giving its company to ICICI Bank, you have Kotak Bank, IndusInd Bank, HDFC Bank. These stocks are correcting, and IndusInd Bank is at 18-month low. It's forming that lower top lower pattern bottom formation. And when did last time we spoke about such kind of formation in private sector banks, which have high preference from institutions as well. So IndusInd Bank certainly adding some short positions, not very high, but volumes are pretty high. So take note of it, that there is some balancing act which is going on in Bank Nifty.
All right, that's the take coming in at an 18-month low for IndusInd Bank. Tell you what, let's take a quick break. Come right back as we flag off the rest of the stocks. This is Market Fatafat. Great to have you back with us. This is Market Fatafat. We're counting down all of the stocks to keep on your radar. Today is the day when the market is favoring the uptrend. So let's flag off all of the stocks to watch out for. And if there's one sector that's buzzing away, it sure is the PSU Bank. So we flagged off Canara Bank now, Samit. Let's get in your view on OBC. Do you like the stock?
Definitely. See, in last 3-4 days, we have already seen some kind of outperformance from this particular counter, and with today's sharp move, the stock has confirmed its high top higher bottom formation on daily chart for the first time in the recent past. So that's a positive sign, and as a disclosure, we had recommended this to our client in the morning also somewhere around 66.5. From here on, our immediate expectation would be around 75, but if we have to take slightly medium term view, then we expect the stock to head towards 80-82 quite soon.
All right, that's the take coming in on OBC, 7.8%, and Samit says that clearly you can watch out for a target of 75. Meantime, Nestle as well is on the radar. Vivek, take us through what exactly CLSA had to say about the quarter gone by.
That's right. So again, another company that came out with numbers post-market hours on Friday. A lot of analysts on the street were concerned about the quality of the earnings, especially given the fact that raw material prices for a lot of the FMCG companies would have gone up. But they're quite enthused by the fact that Nestle has seen very good control as far as margins are concerned. What CLSA has done is that they've upgraded the stock to buy from an outperform earlier. The target is almost at 11,700 rupees a share, and they believe that margin expansion in Q3 was a very strong positive, and they're actually going ahead and revising their EPS targets upwards by 2 to 3% to factor in the strong earnings that the company has come up with. So again, it's another stock that's done quite well for itself, even in a choppy trading session.
All right, keep an eye out on Nestle, 9,698 on last tick. Meantime, Vinity Organics, and walk us through the quarter gone by, Karunya.
Avan, the numbers are looking decent on most parameters. Let me run you through it quickly. Revenues have come in at 253 crore rupees. They're down nearly 5%. Profits have been completely flat, just a minor uptick of 1% there. 65 crore rupees is the number. EBITDA is also up 4%, 95 crores. While on all of these counts, the numbers have been fairly tepid. Look what they've done with the margins. They've expanded to 37.6% versus 34.6%. So clearly the management guidance has also, they've been able to turn it into a reality. They've been able to clock in very strong margins once again. And that's something that's keeping the stock upbeat in trade.
All right, keep an eye out on that one. Vinity Organics, it's been pretty strong, as you said, on pretty much the operational front. Well, let's move on then to another set of numbers, and PI Industries is on the radar. In fact, this too on the back of numbers. On a standalone basis, it's been a fairly decent quarter. The profits have come in higher by almost 18% on a year-on-year basis. The top line growth at 723 crore rupees. The EBITDA at 147 crores. And the EBITDA at 134 crores, up about 10%. So here you have a good set of numbers and clearly a thumbs up, 735. Well, let's move right on. Lupin is a stock that's buzzing away in trade as well. Siddharth, what are the observations?
If you look at pharma names, they have reduced volatility of late, and I'm not talking about Divi's Lab, it's reacting to its numbers, but Lupin, Sun Pharma, all these stocks have been consolidating, and Lupin case in point, Avan, has been taking support around this 200-day moving average. We are also seeing that fresh formation of long positions have been taking place in futures. So all in all, data is positive, and 4% up in a market which has been more or less slight positive bias or in a correcting market positionally. Pharma names are doing well. Watch out Lupin, because it is also forming a triangular pattern kind of, and if that breakout takes place, then it would be positive.
All right, there you have it. That's the take coming in on Lupin. Moving right on then, Kunal, let's flag off Grasim as well. Day after day, when you look at the list of Nifty losers, you tend to spot Grasim's name. Today, finally, we're seeing some sort of a recovery. But what exactly is the indication on the charts, and what should investors who've been long-term and holding on patiently do?
So I think, yes, Avan, the last, 4-5 months have been quite turbulent for the stock price. But when I scan through it on the long-term charts, whether there are some trendline supports, and there is a strong support at that 750 mark for Grasim. And now you look at it in the context that the fall which had been accelerated in the last 1 week, that fall has gotten arrested, which means that the stock is now trying to form a bottom, and that 750 support should hold on to it. Is what I sense. So I think from a positional play, Grasim could be bottom to at current levels, because the risk reward is also very favorable. Keep 750 as a strict stop loss and look out for targets of at least 825 to 850 range for Grasim.
All right, that's the word coming in. Grasim in focus at 2%. Meantime, Dishman Carbogen as well. We don't flag this one off quite often, but why is it in focus today?
This is an important corporate update, Avan. The company has said that the US FDA inspection of its unit located in Bavla has been successfully completed on Friday. The inspection was also concluded without any major or any critical observations by the regulator. So that's an important and positive trigger which is fueling the stock price.
Oh yes, it sure is. That's clutching onto the level of about 230 as we speak. But then there's Punj Lloyd that we should flag off. In fact, this time around, we have seen the net loss widen in the second quarter to 1,465 crore rupees. Remember, it was a loss of about 248 crores that they delivered last time around. There have been delays, defaults in repayments of substantial dues to the company. The current liabilities exceed the current assets, and the present conditions have made a lot of material uncertainty that exists. Meantime, they have put out a total income at 766 crores. This too has declined from 1,086. Moving right on then to number 25. Why are we flagging off Bata India? Siddharth.
Because it's doing well and it's adding long positions. That's what the statistics are suggesting. Now this is one mid-cap stock which has been doing pretty well for itself, Avan. And if you look at the statistics today, a decent formation of long positions. Also, technically this 940 resistance, that's getting challenged, and that's the reason I have highlighted Bata India, mid-caps which is doing well. Today, most of the mid-cap stocks are doing well, but Bata India, even in a market where mid-cap stocks were underperforming, was doing well.
Okay, there you have it. That is Bata India, 3%. Moving right on, Samit, let's also flag off L&T and tell us where the stock is headed from the current 1236.
See, since last 3 weeks, this event counters have been, consolidating around its multi-month support area of 1200, 1180, and today we are seeing a good bump up in this counter. So the stock is now rebounding from its multi-month lows, and it has already broken out from its intraday highs of 1220, 1225. So from here on, we expect continuation of this momentum in the upward direction, wherein the momentum traders can hold their position for immediate target of somewhere around 1260, 1265. Keep a stop loss around 1215, which seems to be a strong support level.
All right, there you have it. That's the take coming in, 3.5% on L&T. Well, let's move on then and Vivek, chat a little bit about what's going on with the succession plans at Yes Bank.
This particular event where Rana Kapoor did not get an extension has actually been a key derating event as far as Yes Bank is concerned. Now the company, even after posting a disappointing set of numbers, saw further erosion as far as its market price was concerned. But today, what we are coming to know from newspaper reports is that the committee which has been formed to search for the next candidate to succeed Rana Kapoor has now identified the profiling of the candidates. They've shared it with the RBI, and now what they're saying is that based on the initial industry mapping is how they've actually gone ahead and come up with the entire candidate profile. So again, this particular event will be something that's extremely keenly watched by most of the market participants.
Yes, that's a stock to keep on the radar. We'll have to wait and watch how things actually shape up. Meantime, at number 28, let's talk about Seshasai paper, and pretty impressive set of numbers, Karanya.
That's right, and that's why the resilience in the stock revenues up 46%, coming in at 331 crore rupees. Avan. Profits have grown 92%. They have come in at 50.4 crore. Even the operational performance has been very strong. 24.8% is where the margins came in for the quarter gone by versus 21.2%.
All right, watch out for the counter. It's seriously having quite a steady session. Meantime, there's a stock that's buzzing from the travel and tourism space, and that is Cox & Kings. In fact, as we speak, it's a 5% up move that's largely on account of the sale of their education business. The company has gone ahead and sold the education business to UK-based investor Midlothian Capital Partners for a sum of 4,387 crore rupees. This comprises of HB Education, formerly known as Holiday Break, which is a formerly owned subsidiary of Holiday Break. It's Baird and Axis Capital, which are the financial advisors. And clearly, this is working well for the company. Well, at 29 then, just sniff away from that 30 mark. We'll wrap it up right here on the show. Thanks so much for watching. But do stay tuned. We've got Markets at Noon coming up.